So let's zoom in on this person's mortgage. This is one of my clients. They had a mortgage at a credit union, and they're sitting at a 4.99% interest rate right now. Really not that bad, but we could bring them over somewhere for about 3.99 for their situation. It's not the rate for everybody, but for these clients, that would work. Now, they're doing a weekly payment right now, and they just want to know if switching from their current lender to a new lender makes sense so that we can save some money, because obviously you see there's about a 1% gap from their current lender to a new bank. Okay, so that would entail breaking the mortgage at their current lender and then switching it over. Now, in this scenario, we can see that currently they're paying about $568 a week, and they have a 5-year term. They're about halfway through their 5-year term currently. And again, we want to look to see if we can switch this over. So let's look at the math, okay? So what's important here? So I guess, does this make sense to switch, right? And does this make sense for that client? If you look at the principal that they have left over, they owe about $400,000. How much is going to be paid over the next 5 years, et cetera, et cetera. But we want to pay attention to this term interest. So the interest they're going to pay throughout the term of this mortgage, and then as well as the balance remaining at the end of this mortgage. Now, in this scenario, if we looked just at scenario number 1 and scenario number 2, okay, we see that in scenario number 2, there is a savings to switch of approximately $25,000, okay? That's composed of a couple things. So from interest to interest, we see there's about $20,000 of savings from the current mortgage, right? They're paying about $95,000 over the next 5 years. And then in this scenario, they're only paying $75,000. The next thing you want to look at, and this is what a lot of people look past, okay, is the balance remaining at the end of the term. So you'll see that not only is there a bunch of interest savings, but there's also approximately $6,000 of additional principal pay down, okay? So that's huge. So again, looking back, there's about $25,000 of savings just to this simple switch. But there's another metric that we can look at doing. Now, these clients are comfortable with their weekly payment currently, okay, at $568. If we did the simple switch, they would save, about $50 a week, okay? So $200 a month, roughly, okay? But if we switch that over and we said, hey, you know what, let's keep approximately the same payment after we move the mortgage over at our new rate. So we take that, we look at now the interest savings here. The interest savings isn't a huge difference, maybe about $1,000, $1,500 difference there. But what we see the big difference appear here is at the principal pay down, because the reality is any additional amount of money increased on this 517, so here about this $50 of increase per week, is going directly toward the principal balance of the new mortgage. So that's all getting applied to principal. So after the next 5 years they have left over, they're going to have $338,000 left over, as opposed to their current situation of $358,000. Now, that also means that their mortgage is being paid down faster. So you see this is their effective amortization rate here. So they're also shaving off more than 3 years off their mortgage by doing this switch. So now what's the catch, right? The catch is that in this case, the credit union is going to charge them a penalty. So penalties are different whether you have a variable rate or a fixed rate, and bank to bank, the IRD or interest rate differential is charged differently. Now, in some scenarios, in some banks, this exact situation, as of the day that we looked at this, the penalty would be $15,000. Okay. After we checked with their credit union, it was actually only about $5,000. Now, these clients do have some money saved up, so they can just pay that $5,000 right out of their pocket to get rid of that penalty and then move the mortgage over. And of course, because in scenario 1, we have $25,000 in savings, and in this scenario 3, we actually have closer to $50,000 of savings. Obviously, that $5,000 penalty really it just gets, it's nothing, right? The savings is still huge. So in this case, they can pay it out of their pocket. Let's say they didn't have the money in their pocket. What could they do? Okay. 2 options. Option number 1 is when we do what's called a transfer. Okay, so we just transfer the existing mortgage over and the existing term over to a new bank. There's no new money, right? But we're allowed to capitalize $3,000 of those charges into the new mortgage. A new bank is not going to cover penalties for you. They will cover things like an administration fee. Sometimes they'll cover a discharge fee. Sometimes they'll cover an appraisal fee if they need to. So anything transferring over, any transfer costs, they'll generally eat for you, but they're not going to pay your penalty. So we need to make sure you can take care of that. So one way they'll do that is they'll roll $3,000 into your new mortgage without having to do a refinance. It's still considered a transfer or a switch. Okay, that's an important difference. a transfer or switch gets a better rate than option number 2, which would be a refinance. A refinance is when we actually we redo the mortgage completely at a new bank, right, to pay out the existing mortgage and then add additional money to the new mortgage. So in a refinance, as long as there's enough equity in the property, we can actually take the entire penalty and wrap it into the new mortgage. And again, based on the math we have here, that still makes a ton of sense to do. The equity's there. But option number 1 and best option would be to just do a switch transfer. In this case, we could roll in $3,000 of that $5,000 penalty. We're leaving $2,000 to have to be paid out of the pocket of the clients. So in this scenario, $499 to $399, definitely a switch would make sense for the majority of people in this scenario. Okay, this is helpful. I do a lot of other shorter clips and reels on Instagram. My handle is matt.mortgages on Instagram and on TikTok as well. Take care and have a great day.